Hey there, everybody. I'm Logan Alec. I'm a CPA. I own Choice Tax Relief. We help people with back tax debt as well as many years of unfiled returns get into a resolution, cut a deal with the IRS for this stuff. Today, we're talking about the IRS notice CP 2566. I have a sample one here on screen. We have seen several, many of these actually, going out lately. You can see this one was just, the notice date is just July 1st, 2024, which was not too long ago. We're seeing a lot of these. We haven't seen this notice in a while, but we're seeing these again. In this video, I'm going to go through this notice. I'm going to tell you why the IRS sends it. I'm going to, like I said, I'm going to go through the notice part by part so you understand it. And then at the end of the video, I'm going to tell you what you should do if you received IRS notice CP 2566. But first, let's talk about why did the IRS send this notice to you in the first place? Well, you could probably guess it's because you didn't file your tax return for a given year, right? In this case, this client didn't file their tax return for 2018, so that's fairly obvious. But what I want to do now is actually, if you don't mind, dig into the Internal Revenue Manual that tells you what exactly happened within the IRS that resulted in you receiving this notice CP 2566. And to understand the CP 2566, you have to know about the IRS ASFR system. What is the ASFR system? ASFR stands for Automated Substitute for Return, right? What is an SFR? An SFR is a substitute for return. That's a return the IRS does for you based on information it has, such as how much you made on 1099s, how much you made on W-2s, etc. Okay, I have a whole video about SFRs. Link to that video here at the top of the screen. Okay, so if you want to know all about SFRs, I think I go into pretty deep detail about the ASFR system in that video. Check out that video. Just a high-level overview. Okay. So an SFR is a return the IRS does for you. The A stands for automated SFR, okay? Because what is actually doing the work here is not a bunch of IRS employees preparing your tax return for you. It's a computer. It's a computer that systemically determines which taxpayers have not filed the required tax returns. It prioritizes those taxpayers based on various factors, right? For example, this taxpayer, they didn't file 2018, right? Which was like 5 years ago. And it's taken the IRS 5 years to get around to them. They weren't a super high priority necessarily, but lo and behold, now the IRS is going after them for this year. Right, so it literally says here, ASFR is a standalone system residing on a Sun Microsystems platform at the Enterprise Computing Center. And this Enterprise Computing Center is an IRS office. I think it's in Martinsburg, West Virginia. Okay, so this whole ASFR is literally one big computer. Okay, and once your name and your year, once the gears start turning in the ASFR system, this is what happens. Well, let me tell you. So there's some criteria, right, to what kind of returns, what kind of taxpayers will go to ASFR for the IRS to prepare tax returns for them. I went over this in my SFR video. ASFR prioritization, right? Obviously, the IRS can't go after everybody at once who hasn't filed a return, so they have to prioritize things. I talked about that in my SFR video. But what I really want to talk about right now, before I actually get into going into the 2566 step by step, is this part of the IRM that talks about ASFR systemic processing and calculations. Okay, so when the ASFR processing is initiated on a module, and that's, you can think of that on a tax return, right? So there was a module for this taxpayer's name for 2018. Okay, that's a module. ASFR system will calculate the proposed tax assessment, right? They'll do their calculations of how much the IRS thinks they owe based on their tax return, and generate both a 30-day and 90-day letters, okay? And then it codes it in the system here with these tax codes. So first, the ASFR computer computes the taxpayer's taxable income, okay? And then it computes the tax due penalties and interest on that taxable income that it generated, okay? Here's some more kind of coding stuff. And then after it does that, after it makes its calculations, right? And it calculates the taxes, the penalties, and interest for the module of the year. That's when it kicks out the 2566. Well, first they do some other internal checks here called a TIF check, right? It's basically the ASFR system talking to another IRS system called IDRS to make sure that, yes, an SFR is appropriate. Double checking that an SFR is appropriate for this particular tax year for this taxpayer, right? So, and if a module passes that check, the 30-day letter is systemically generated. It's just generated by a computer, by the ASFR system, right, using standard language, okay? And it's a 30-day letter. I'll explain what that means in a bit. 30-day letter is mailed in address correction envelopes. When the 30-day letter is undeliverable, the post office will return the letter with new address information when available. The letter gives the taxpayers 30 days to respond, because that's why it's called a 30-day letter, right? And if you look at the 2566, you'll see the notice date. This one is July 1st, 2024. What is their deadline, right, to respond to figure this out? July 31st, 2024, right? How many days between July 1st and July 31st? You don't need to be a math genius to know that there's 30 days between those two numbers, right? Those two dates. So, right, 30-day letter. What if you don't respond to the 30-day letter, right? Then what the IRS is going to do, if you don't respond to the 30-day letter and don't address this issue, they're going to send you what's called a statutory notice of deficiency. I've covered this more in other videos. I'm not going to go into great detail here, but this is a 90-day letter, okay? You might be looking at the 3219. This is a statutory notice of deficiency. Okay, it might be the CP 3219N. That's another one that they send for SFRs. This 3219 was actually for a taxpayer with an SFR, right? Now, this is called a 90-day letter because you have 90 days, okay, to file a tax court petition. And it's from the date of the letter, okay? This date here, not the date you received it, okay? That is 150 days if you are outside the United States. But generally 90 days, right, if you're here in the U.S. and it was addressed to you in the U.S. To file a tax court petition, right? Now, you don't have to go to tax court to fix this after you see the 9-day letter, right? You can still fix this internally and administratively with the IRS, okay, within that 9-day period and beyond the 90-day period as well, okay? But the tax court deadline, that 90 days tax court deadline, that is fixed. If you miss it, you miss it, right? If you miss that tax court deadline, you can no longer go to tax court to contest this deficiency, and you just have to deal with the IRS at an administrative level to fix the issue, okay? And then if you don't respond to this 3219, don't file a tax court petition, you don't get on the good foot in dealing with this administratively with the IRS, then the IRS will eventually, sooner usually rather than later, will assess the tax against you based on the substitute return that it prepared for you, right? It's gonna basically make this assessment, right, on this proposed amount. Because remember, 2566, the tax hasn't been assessed yet. Okay, this is just a proposed amount. You can still challenge it, right? But if you don't challenge it, either in response to this CP 2566 or the statutory notice of deficiency, then the IRS will then assess the tax, right? Going to officially record it on the government's books and possibly take forced collection activity against you, wage garnishments, bank levies, etc. They do have to give you proper notice, as I've discussed in other videos, but that would be the next step. Okay, so I think I've kind of covered why the IRS sends a CP 2566, where it fits in the ASFR framework. Now let's go through this notice kind of piece by piece here, okay? So here's the IRS stating we still have not received your tax return for the year, and there's the demand to file it. You must file your 2018 tax return. We sent you previous notices, like maybe a CP 59. I've covered that here on the channel recently. Link to that video here at the top of the screen. We sent you previous notices asking that you file your tax return form 1040 for 2018. However, we still have not received any response from you. You must file your return by July 31st, 2024, or we will assess taxes for you using a filing status as single or married filing separate. This means you may not receive certain exemptions, deductions, or credits that you would otherwise receive if you filed your own return. Right. So it's basically saying, hey, look, we're basically gonna file a return for you and make an assessment of tax based on that return if you don't fix this. Right. They don't tell you here that you actually have an additional 90 days after this letter, but bottom line, this is the bad news return. Right. Your tax liability is probably going to be overstated. right? And therefore your penalties and interest are going to be overstated as well, right? Because the IRS is not giving you any credits. They're not giving you any deductions other than standard deduction, right? They're assuming your filing status if they think you're married is married filing separately rather than married filing jointly. If they believe you're single, they're just giving you single filing status, even though you may in reality have a dependent and be able to claim head of household status. So, it's kind of it's a bad situation to be in, right? When the IRS does your taxes for you, generally speaking. Okay, and here it summarizes its calculation of how much it wants to assess you for, right? So based on their SFR through ASFR, they believe this taxpayer's tax liability for 2018 was $20,464, and the taxpayer made payments of $15,063. That could be estimated payments, extension payments, withholding, etc. And then there's the penalties here, and then the interest, and these are explained in further detail later in this notice. Okay, and then we have the part where the IRS says what they want you to do immediately. And it says to avoid the assessment of the proposed amount due and additional penalty and interest charges, you must file your 2018 or your tax return by July 31st, 2024, which is 30 days from the date of the notice. You also have the option to accept our proposed amount due and pay immediately. Keep in mind that this amount may be higher than what you would owe if you filed your own return, and that's right. And I'll talk about it later, but there is a response form at the very end here where you can simply consent to the IRS's proposed assessment. Okay. All right, and here's instructions on filing your return. I'm not gonna go into detail there because it's fairly basic. Here's how you file a tax return. If you want to accept the proposed amount due, like I was saying, you would complete, sign, and date the response form, mail it to the IRS along with your payment, so they receive it by 30 days of the day of the notice. Keep in mind this amount may be higher than what you would owe if you filed your own return. I like how they keep repeating that, right, for the sake of the taxpayer. Obviously, if you can't pay, they want you to pay as much as you can now, right, and then pay the rest over time. Okay. This is a rare thing where you would just accept the SFR, right? Usually there's at least something that can put you in a better spot than the SFR return, right? Now, if you don't think you had to file a return, you can call the IRS at this number and explain your situation. Very rare that we've had a client or a prospect receive a CP 2566 and them not having a filing requirement. Okay. Here we go. If we don't hear from you, if we don't receive your 2018 tax return, response form, or payment from you by July 31st, we will continue processing your case. Interest will also increase, and penalties may apply until we receive your 2018 return or you pay the amount due in full. And then they kind of detail down here how they calculated the proposed tax liability that they're basing their proposed assessment on. All right, so here's a breakdown of the income here. Right, wages, you're not really going to be able to fight that. That's just from your W-2. I mean, unless the W-2 is wrong, but that's going to stick. Total pensions and annuities, that's probably going to stick. It could be, retirement account distributions that may not be fully taxable. You may have Roth with some basis in it, so maybe there's something there. Rental real estate, royalties, partnerships, corporations, trusts, etc. I mean, I've reviewed this notice. I know this is from a K1 interest. There's not a whole lot you can do with the K1 income, because that all that income and deductions are calculated on the partnership return. Maybe there's unreimbursed partnership expenses that you could look into. Unemployment comp, not much you can deduct against that, right? So they're basically saying, look, here's what we think your income is based on tax docs that we received, right? Because every one of these has a tax doc associated with it. The wages is a W-2. Pensions, annuities, probably a 1099-R. The Schedule E stuff, real estate, royalties, partnerships, corporate, probably a Schedule E. And then unemployment income, probably a 1099-G from the state, right? Okay, and then here's kind of how it's come up with the taxable income here and the tax calculation. And then it says, look, here's your payments. Here's your payments, right? You had $15,063 withheld, so this $15,063 subtracted from the $20,464, tax liability for the year the IRS is coming up with is $5,401. And then here they show you the income that they are basing their proposed assessment on, right? Their ASFR on. Now, what's interesting here, and I can't remember the details of this case specifically, but like not all the income that they would report on their return is here, right? For example, the pensions and annuities on the 1099-R from Vanguard is there. The K1 for the Schedule E income is there. The 1099-G for the unemployment compensation is there, but not the wages. So I don't know. I don't know why that's not indicated there. Might be a mistake. I'm not sure. It says if all of your income is not listed here, you must file a tax return and include it with your other reported income. I'm guessing the IRS's purpose with that sentence is to make it so taxpayers know that, hey, even if something wasn't reported to us, you should still report it. But this is kind of weird because the W-2 was clearly reported to the IRS, right, as W-2 wages, and yet they still didn't include it here. I am not sure why. Okay, so these are the tax forms that the IRS is basically basing this proposed assessment on, right? They say, hey, look, Vanguard says that there's $4,310 of taxable income for this distribution. This K1 says he has $5,535 of ordinary income. The 1099G is $7,650 of 1099G income, right? This one says gross distribution, taxable amount, and then the federal income tax withheld, right? So these are the numbers that go into the ASFR computer so ASFR can calculate the proposed assessment. Then they talk about the penalties, right, that they're proposing to assess, and they will assess to some degree. Failure to file penalty, that's 5% per month or part of a month that a tax return is late. Obviously, if this is an SFR filing, the return was never filed, and so the maximum failure to file penalty of 25% of the balance shown on the return or the SFR would be the IRS would want to assess that. All right. There's a failure to pay penalty. This is a 0.5% a month for part of a month that you have not paid a tax due. It also maxes out at 25%. If the failure to file penalty and the failure to pay penalty run concurrently, the failure to file penalty is reduced by the failure to pay penalty. There's an underpayment of estimated tax penalty here, right? If you don't make your estimated tax payments throughout the year, the IRS wants to assess a penalty. Then there's information about the interest charges. They don't have a little chart showing the interest rate and then the dates that interest rate was applicable. But basically, obviously, the IRS charges interest on your balance. And here's some additional information. They kind of put it in all these notices. Nothing too interesting here. Right, and then down here is a response form, right? So if your contact information is different, you can update it down here. You can update it here by writing it out. You can put your phone numbers. You can say that, hey, I'm gonna just do my return, and here it is. Here's my original return that I just prepared, and then you can close it and sign. Or, like I said, you could agree with the proposed amount due. I generally would not recommend this. And then, indicate your payment option, right? If you want to pay in full right now, or you can say, hey, I'll figure it out later, or you can do an installment agreement request, okay? So that's it. Let me know if you have any questions about this CP 2562. But before we go, I want to tell you what you should do if you got this notice. First thing, okay, make sure the IRS is right here, okay? Make sure that when they say, hey, we think that you made, where'd it go? This money, make sure that matches, right? Make sure you did, okay? Because sometimes we do see fraudulent stuff pop up with these, okay? And if the IRS is right, it's like, hey, yeah, I did earn this income and I never filed a tax return, so I never reported it. File that tax return ASAP. ASAP, please. Please file it ASAP so it can get processed by the IRS, and this doesn't have to be a deeper hole than it already is, right? Now, I will say, I will say you realistically have a little more time than what the IRS says here, right? This deadline, like realistically, folks. Okay, so I'd rather you put together an accurate return, take a little longer than this, than just half-arse the return and it's a piece of crap that's going to be audited. Okay. Obviously, if you have rental income, if you have business income, right, where you have to come up with your own expenses, not everything's reported to you on a nice tax form, it could take you longer than a month, right, to put this together. And if you don't have those records, we got you covered at Choice Tax Relief. We have actually a proprietary system to reconstruct business expenses for business owners who have lost their records and can't access them. Okay, right. But then you're gonna prepare your original return, file your original return, because it's 2018 or sold. It does have to be paper. It has to be paper filed, and then you really got to monitor your account, right? Because it happens so often that we will send in an SFR protest return, a return to protest an SFR, or in this case, the SFR balance hadn't been assessed yet, so it would just be the original return, not necessarily an SFR protest return. But the IRS still assesses the tax, right? So you gotta stay on these folks, and that's part of what we do at Choice Tax Relief. After we submit these kinds of returns in these situations, we monitor the client's account, right? Make sure that the IRS is doing its job, moving quickly, so the taxpayer doesn't get an assessment and then, oh wow, okay, I've been levied, great, right? Because that's obviously not what we want, right? So in summary, the CP 2566 is a notice the IRS sends when you are in the ASFR system, and the IRS has even already calculated a proposed amount due in its big old ASFR computer, and it wants to assess that tax, but then it's got to give you these notices first. And of course, the CP 2566 is the 30-day notice in this sequence, and the letter 3219, or sometimes the CP 3219N, or some variation of that, is the 90-day notice in this situation. Folks, if you have unfiled tax returns, watch my video, How to File Back Taxes, Avoid Penalties, and Move On with Your Life. Link up here at the upper left-hand corner of your screen. If you'd like a free consultation with us at Choice Tax Relief, give us a call at 866-8000-TAX. That's 866-8000-829. Or fill out the form on our website, choicetaxrelief.com, and we will reach out to you. Thank you so much for watching, everybody. I'll see you in the next video. Bye-bye.